please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So it's been a very volatile day. The market's been trying to recover, but that recovery has been well and truly sold into now. So 10,712 is what we have on the Nifty. The bigger problem today, of course, has been in the broader market. The mid-cap index down about 1.2%, and a lot of stocks are now seeing decline. The latest to join the bandwagon is DCB Bank. Just pull out the intraday chart on DCB Bank, that stock making the fresh low of the day. Good time to get you the BTST calls from our technical experts, Mitesh and Prakash. Mitesh, you go first. On the index, you reckon we are close to any kind of support, or you think there's some more decline? And what about individual stocks?
We are, Anuj. I think 10,700-680 is what I had mentioned as a good and a key support area. So we haven't broken that, but the fact that we are closing towards the low of the day is not, convincing me to take a long as yet. So maybe tomorrow morning we'll watch that out. For the time being, we maintain a bias of neutral on this stock side. I have one buy and one sell. L&T, you were just flagging that stock. I think that's kind of giving some intraday sell signal. So STVT with a stop at 13.18 for targets of 12.90.92. And RBL Bank is close to support areas of 541, 542. So that's a BTST with a stop at 539 for a bounce back to about 553 levels.
Okay. Mitesh, your calls, what are you going with? Prakash Gaba, so sorry.
Yeah, I do feel that market could be still down, though we are very close to support of 10,710. Two stocks both on the short side. I just changed it at the last moment. A is Reliance Communication, looks weak. We can see a slide to around 13 zones. No sign of strength as yet. Stop above 15 should be fine on Reliance Communication. And second is Havells. This too looks weak to me. Can see a slide around 534. Stop above 542.
Okay, so that's some buy and sell calls right now. For Shivani Sarkar Kurian, Vice President and Head of Equity Research at Kotak AMC, is with us now. Shivani, good morning. Good afternoon, sorry. So thoughts on the recent market moves and thoughts in particular on the mid-cap space. We're seeing fresh round of decline here.
Right. Hi, good afternoon. Thanks for having me on the show. So, the market volatility continues, and our view is that this sort of movement would possibly continue till the tussle between the macro and the micro is seen. What's clearly worrying us on the macro front is twofold. One, of course, is the worry on the currency and the external sector. With oil at current levels, our view is that the current account deficit could be anywhere in the range of 2.6 to 2.7% of GDP, and funding that deficit is clearly a challenge. Secondly, what we are also seeing in terms of stress on bank balance sheets, a large portion of the banking sector which is starved for capital and able to provide credit. And what also we've seen in terms of the rhetoric on the trade wars. Now, while it is rhetoric at this point in time, if it does become a full-fledged trade war and China retaliates, there would be an impact on India as well, even though India's trade surplus with the US is still much smaller in the larger scheme of things. So the macro is clearly a challenge. On the micro front, we've been maintaining that on the ground our interaction with companies has suggested that there is an improvement. And from a downside risk protection, what we've also seen in terms of domestic flows have been fairly steady. And on a structural basis, the formalization of savings as a theme is likely to play out over the next couple of years. On your question on mid-caps, clearly mid-caps had seen a huge run-up last year, and the kind of correction that we have seen has also been fairly sharp. But what we have noticed is in pockets, especially where there was this huge run-up ahead of fundamentals, the valuations are still ahead of a 10-year average. So it's possible that mid-caps do see some further correction and stay volatile. The way we are approaching mid-caps is to focus on companies which are high growth, clearly growing at a faster pace than the industry, and growth which is sustainable. And secondly, a lot of emphasis on quality. So it has to be high growth, high quality, focus on corporate governance, clean balance sheets, and where there is clarity in terms of policy on capital allocation. So mid-caps is going to be fairly stock specific. One needs to be cautious in the kind of companies that they are approaching. And also further correction and some degree of volatility cannot be ruled out even at this current point.
Shivani, hi, good afternoon. I know that you do like the retail-facing banks. I mean, I think everybody on the street really likes them. The question is, what about the corporate-facing private sector banks or even some of the larger PSU banks? Are you willing to put the faith here because maybe better valuations?
So let me answer your question on the PSU banks first. We've been cautious on the PSU banking space for a while, and we continue to remain so. The clear challenges exist. One, of course, balance sheet is stressed, and the kind of capital requirement for the PSU banks remains huge. So whatever capital that came in last year has clearly gone towards cleaning up the balance sheets of the PSU banks. And therefore, from a PSU banking space, we continue to remain cautious. Consolidation, whether it's on the cards or not, if it plays out over the next few years, will also add to the kind of worries that we have on the PSU banking space. On the large corporate banks, especially on the private side, one, of course, there is a likelihood of management changes. That is something that one has to contend with. But if you see the kind of slippages that these banks reported in the fourth quarter, it is possible that a large part of the pain is over. Having said that, it's not likely that in the next 1 or 2 quarters you're going to see a significant improvement in terms of either ROEs or earnings for these banks. So it's going to be a slow and steady improvement with possibility of credit costs normalizing over the second half or close to the end of this year, and then normalizing into FY20. So it's going to be, you got to have patience, and it's going to be a slow and steady improvement where the the private corporate banks are concerned.
Okay, by the way, there's some stocks in a league of their own. I know since morning pointing out, HDFC and Bajaj Finance, both of them are quite interesting. Fresh highs of the day for both these names, or closer to that. So these two stocks, okay, not HDFC, but Bajaj Finance certainly is trying to move there. Hindustan Unilever also has recovered from the low point, so there's been some bit of buying over there. Shubhani, the big talking point for the last few days has been this big pharma rally. Of course, you reckon the top-down move on pharma is done, or you think there's some more before the bottom-up move starts?
So I think the way we look at pharma as a sector, clearly what has changed is the fact that the kind of pricing pressure that you saw for US generics, that pricing pressure has started to abate. Now the question is that, does the pricing pressure go away completely? The answer would still be no. Given that the pace of approval is going to stay fairly high and elevated, the life cycle of these complex generic products has shortened, and therefore you would continue to see pricing pressure. Of course, not as much as what you have seen in the last few years. So that's what has really changed in the sector. What we've done and the way we are approaching the sector is stock specific. We are looking at stocks where there is a large approval pipeline and the risk of competition is low. So that's one set of stocks that we are looking at. Secondly, the growth and demand from the domestic business has also been fairly steady, and we are looking at companies which have a sizable presence in the domestic market as well. Domestic market, the risk of price control remains, but clearly growth has seen an improvement. So these are the two segments where we are trying to identify stocks. The approach has been fairly stock specific where pharma is concerned.
Okay. Shubhani, overall on the market, what is the sense? We've been fairly range bound for a while. And I think the only thing that's gotten us through over the last couple of months is the fact that the money that your community is getting, that was still pretty stable and steady. So on the flow side, what is the kind of internal anecdotes that you're picking up? Because that's the lone pillar, the domestic liquidity that's keeping us going.
So, even if you looked at the numbers that came out for the last month, numbers were fairly steady. While there has been clearly some moderation from the peak, our view is that, structurally, the kind of formalization of savings will possibly continue. There could be volatility depending upon how the market behaves. But, the kind of flows that you are seeing, especially in terms of SIPs and systematic investment plans, also gives the support to the overall story in terms of money moving into domestic mutual funds. So I think, yes, that also provides some degree of support to the market in this current volatile phase.
All right, Shivani, thanks a lot for your time today. It was good talking to you. We'll take a break on that note. Up next, we'll have the market closing. It's been a rough day.
just about trying to hold on to the 10,700 mark. That's a saving grace that we haven't dipped below that. Psychological for what it's worth. Axis Bank is seeing some serious sell down today, so almost 1.5% gone from that stock. IndusInd Bank, on the other hand, has seen some buying traction, but it's still negative. The stock is still down, though it is off the lows. And the other interesting aspect is that Reddy, Cipla, Sun Pharma, in the last sort of half hour, 1 hour, these are the stocks that have also seen some pressure after the massive rallies that they have had. So you can see pretty much at the day's low on most of those stocks. Prashant Prabhakaran, Senior President and CEO at Yes Securities, is now joining us. Prashant, let me start by talking to you about a stock like Reliance, which has had a big rally. It's just dipped below 1,000 now. Should this dip be bought, or if someone's, kind of participated in that rally and they're not in it for the long haul, should they be thinking of getting out? What's the sense?
So Reliance is a stock which has actually seen a lot of positives that have come about thanks to the geo portion of it giving it support in the balance sheet overall. So it is a stock. Your refining margins have been strong, that have been there. So it is a stock for every correction that you hold on. It is to have into your portfolio at least for the next 4 to 5 years, thanks to the fact that both these businesses will continue growing at a pace which is large. So we should hold on to it in our portfolio for the long run.
Okay, just look at some stocks now. Infosys, intraday chart of Infosys, that stock is going home right at the lowest point of the day. There was a big rally that took place 2 or 3 days back, of course, on Infosys. Sun Pharma is quite interesting because it's had a decent rally. In fact, even after today, the stock is still up about 16% for the month. But today, right now, making a move. Today has been a global currency move, Surabhi, and indications were there. In fact, today was very interesting because we started absolutely flat on the dollar rupee, and I was surprised personally because there was such a big decline taking place globally. And after that, just as you can see on the screen, the way it's just moved one way, and that also is reflected in the way. The indices have moved today, Bank Nifty in particular. What is surprising to me today is that there's absolutely no IT rally today. Normally you would have thought with this kind of intraday move, at least there would have been some kind of IT rally.
Yeah.
Today, that has not happened. The rupee has moved to the lowest point. The IT index has moved to the lowest point. Is that the first indication of that one-to-one correlation breaking? I think we'll find out. Even pharma index, for example, is now moving to the low point of the day. Or is this just a case of normally as an equities, taking some money off the emerging market equities?
Yeah.
I think it's more of the latter.
Yeah.
And that also explains the kind of advanced decline that we have had in today's trade and the way some of these stocks have fallen. So let's see. We are closing right at the 20-day moving average on the Nifty, 10,700. And that range that we spoke about, 10,650 to 900 thereabout. Tested the upper band, could not cross that. Now we are almost testing the lower end of the band, 10,650. For me, it will be interesting to see if, there's some kind of support over there, because otherwise, there could be some problem. Given the recent history, I think you should find some support at 10,650. But of course, we'll find out that tomorrow itself.
Well, let's see if the worst of this, trade scare, whether it's over and done today, whether we wake up to a fresh morning tomorrow or not. But Anuj, I take your point on IT. I mean, it clearly seems to be that if a sector's done so well, stocks are anyway sitting at 52-week highs, and generally there's a bit of risk off. Maybe people are choosing to be slightly cautious.
Even Dr. Reddy's, for example, that's also moved to almost in the red territory. There are only 4 or 5 Nifty gainers today. In fact, only 5 Nifty gainers, if you want to include 0.1% as gains, Surabhi. So it's a global risk off that has played out today. In the first half, perhaps it didn't react as violently, but in the second half, definitely on the Nifty and also on the mid cap index. Now we are closing at the lowest point. That would not help a lot of people, especially on the bullish side.
Absolutely. Prashant, your thoughts on IT? IT and pharma, the sort of sole islands in the market that have performed last few weeks. On a stock like Infosys or even TCS, would you still buy at current levels?
I think so. The rally is already taken care of to a large extent of the gains that had been expected from the IT rally that is there. So it is short trading positions that you can build in IT that is there. As far as pharma is concerned, actually today morning I had spent time with a contract manufacturer for most of the large pharma companies, and he's saying that the pricing pressure continues to be unabated. Indian markets. And it is not showing sign of any relief to be given, at least for the next 5 to 6 months. If that is the scenario that is there on the ground, then I think so it's a wait as far as pharma is concerned. It is better to lighten up some positions and remain light in that segment also. IT, you can trade in shorter bursts rather than carrying it forward for a longer time.
Okay, just about 2 minutes left. So let's take some final thoughts. Prakash, what's the verdict for the day then?
So far looks weak, Anuj. I feel that unless it starts to trade about 10,740, we must assume that all rallies until 10,740, 750 zones should be sold into. If it starts to trade tomorrow, gap up open and starts to trade about 10,750 or so, then maybe we might see around some 60 to 70 points up more. Until then, no.
Okay. Mitesh, what is your reading of the day and how would you approach things considering that 10,700 is not broken for whatever it's worth?
Yeah, in fact, Surabhi, I was banking on that level to hold out, but what is also important is that we've hardly had any reaction or bounce back from those levels. So in that sense, tomorrow first hour could be very important. If we break 10,680, then I think a test of 10,600 would be very much on the card. So I think we'll take that kind of decision tomorrow morning.
Okay, well, just about a minute left for things to close out. So I guess, Anuj, I don't know how to sort of say it. What would you say, down and not out? But it's still a little hard to say that when you're seeing the screen, which is so weak, the advanced decline ratio, which is still so negative.
Obviously, at 2:30, that was the call that you could have taken. By 3:30, I think obviously you have to say that it was a rough day for the market. I think what's really interesting is for me is the way the mid caps have started to fall again, and the indications came 2 or 3 days back. Keep an eye on that advanced decline ratio, of course. Today, what was interesting was in terms of index losers, it was across the board. But the big drag came from 3 stocks: Reliance, Infosys, and State Bank of India. Just see the charts of these 3 stocks. There was quite a bit of decline for all of these. And what's interesting is that all 3 of them have been relatively stronger stocks. At least this month, they have been. So that way, there was clearly some sign of profit taking in some of these names. Metals and commodities in general were weak. So Vedanta, Hindalco, IOC, HP, UPL, some currency issues over there, of course, that was down. Indiabulls Housing was down. Across the board, there was quite a bit of weakness. Tata Motors was down despite the late recovery. Maruti Suzuki, Larsen and Toubro turned towards the end. On the way up, really, only 2 stocks stand out: Bajaj Finance and also GAIL, which was up about 1%.
Okay, there goes the closing bell. On the mid-cap side of the market, we've seen a 230-point cut on the mid-cap index, and there is a long list of losers out there. Losers include several big stocks as well. So CG Power, once again, 6.5% on the lower side. There's a 6% cut on First Source. Let's just pull up some of the other mid-cap IT stocks, because even Hexaware, Mindtree, most of these names, and even in NIT Tech, they've been on the sluggish side, but the cut is the deepest on First Source today. SAIL has lost about 5%. Rain Industries is down 5%. We've seen selling in Adani Enterprises, CESC. On the commodity side, more names like NMDC, which is down about 4% as well. It's a long list of losers. Indiabulls Real Estate, Reliance Capital, IDFC Bank, even a stock like Tata Global Beverages, 3% on the lower side. Edelweiss. So big names, big stocks, and stocks that have been on the downward slope. IGL has lost 2.5%. LIC Housing Finance is on the way down. So today, as you can see, I'm not even referring to the Vakrangi and the PC Jewelers and 1% beverage sort of stocks, because there's a whole other list of major losers to talk about. Something like Motilal Oswal's lost 5.5%. Venky's is down about 5% as well. So plenty of names on the weak side of things. If I talk about stocks that managed to buck the trend today, watch out for Mahindra Lifespaces. On a day like today, 11% up move. That was a big mover that you really can't ignore. And however it's happening, but the shoe stocks are still marching on. So Liberty is up 9%, building on what was a 17% up move just yesterday. We've seen some green on Bata as well, about 1% higher. Relaxo also managed a bit of a positive close for itself. So that's an interesting story. UCO Bank, 7.5% up. Dena Bank, 3.5% up. So some of these names stood out on the banking side as well. Decent day for United Spirits, 1.5% on the higher side. UB hit its fresh 52-week high today, but the final close was very, very flat. Let's get United Breweries up for you as well. They're half a percent on the lower side. And Anuj was talking about GAIL. Petronet LNG has also had a decent session. Some buying on a Glenmark Pharma continued. But besides that, there is not really too much to speak of on the winner side of the list. Overall, fairly subdued session with a lot of the big stocks, big non-index mid-cap stocks coming under pressure today, Anuj.
Oh yes, that was really the key to it. In fact, there were 3 or 4 key takeaways. So one being that the mid-caps are under selling pressure, and the other being that there's a bit of a currency issue which is there, at least for emerging markets, and that's why emerging markets have started to sort of underperform once again. Prashant, your thoughts on metals and anything that you would buy here?
So our entire buying pack is ready, but we are waiting for the next couple of quarters to get over. We believe that there will be weakness in the overall markets with a lower range of anywhere between 10,300 to 400. So even though I'll end up having a pack to buy, but it won't be before Q3 and Q4 of this year.
Okay, and finally, Prashant, on the pharma side, if you get dips like the one that we got today, I mean, would you still keep buying into the pharma rally? And then would it be mid-cap pharma or would you stick to the big names?
No, it will be the mid-cap pharma. It will be the ones with a slightly lesser debt portion of it, because it is going to be troublesome times for them. That is going to continue, and there is pressure. Actually, with the election season coming in, there's a lot more. Goodies that the government will try to dole out, showing signs of their intervention into this key sector as far as Indian citizens are concerned. So it is going to be a low debt company with a decent amount of focus into India that we'll end up focusing on in the future.
Okay, all right, Mitesh, Prakash and Prashant, thanks very much for being with us today and taking us through market close. Tough day for the bulls, index down in negative territory. We'll take a break. On the other side, government sources are telling CNBC TV18 that the Air India strategic divestment plan has been put on hold. All the details coming up. Welcome back. You're watching Closing Bell. Utkarsh Chaturvedi caught up with Pawan Munjal, MD and CEO of Hero MotoCorp, on the sidelines of the World Cup 2018, which is underway in Russia, to get his sense of whether growth is seen in the company's motorcycle business over the last 4 months will continue.
I'm very optimistic. The previous fiscal has been very good for Hero. This fiscal, the first 2 months have been great. I think we're going to have a very good year. Fiscal 19 is going to be very good for the entire industry, and we are going to do better than the industry.
So speaking of Hero itself, I remember when I last spoke to you during Auto Expo, when you launched your new products on the focus area, you spoke about scooters and premium motorcycles. How have they been doing?
We are all set and ready to go. We will be very soon launching our Extreme 200, followed by the scooters, and then followed by the Experts.
So by when do you really think the market share in the premium side, Hero will have a sizable market share in the 150 plus cc segment?
Well, we are taking our first steps there with the launch of the Extreme 200, with the Experts, and that's how we keep increasing our market share there. Also, the same with the scooters.
And in the bread and butter segment, sir, in the commuter segment, how have we been doing? And do you think that segment to grow as healthy?
We've been doing very good in the bread and butter segment. We've got a lot of products there. We keep working on our products, renewing them, bringing in new products, and we are increasing our market share in the bread and butter segment.
And speaking about the new launches, how many launches in the premium and scooter segment we can see, say, in this fiscal?
We will keep doing what we've been doing in the past. We will keep letting our customers enjoy Hero's products. We will keep increasing the number of launches. The CIT, the Center for Innovation and Technology at Jaipur, is working very, very hard, and they are doing a lot of work there with new products, also with the BS6 emission norms which are coming in very soon.
And any numbers you can give our viewers, how many new products in this fiscal can Hero see?
As I said, we will keep delighting our customers like always.
Now, speaking about BS6, how big that challenge is, and I'd also like you to give us some idea about the electric vehicles and electric two-wheelers you're speaking about.
Yeah, BS6 has been a challenge, but we are all working on the challenge and we are ready for the challenge. We are changing and modifying all our engines for BS6, and we will be ready before the 1st of April 2020.
Okay, let's move on now. Government sources are telling us that Air India's strategic divestment plan has been put on hold. Ashpreet Sethi is joining in with some details on this one. Ashpreet, so clearly the government didn't find buyers at perhaps the right price points or the right sort of conditions. What is the latest?
Well, as we told you, of course, first, as far as the first meeting that was held, as far as Air India divestment is concerned, between the top ministers, now sources who are also part of the alternate mechanism tell us that it seems like the Air India divestment has been put on hold right now. In fact, oil prices have been a concern. That is what we are picking up from sources. The government wants to ensure that they bring in more efficiency as far as Air India is concerned. So it seems like they will be getting more private players on board as far as reviving the ailing Maharaja is concerned. Now, we'll have to wait and see what will be the next step. But for now, we do pick up from sources that it has been put on the back burner. It remains to be seen whether there will be a government official statement at all. Because remember, this is a story which involves national interest, as the government has been trying to divest along with the massive debt that Air India has of about 33,000 odd crores.
All right. Thanks, Ashpreet, so much for that. Let's move forward now. The big story that broke, of course, last evening. It's a big shake-up at ICICI Bank. MD and CEO Chanda Kochar has decided to go on leave till an inquiry led by Justice B.N. Srikrishna into allegations made against her is complete. The bank has now appointed Sandeep Bakshi as the COO. Ritu Singh has all the details.
The suspense is finally over, and it looks like the board has decided to give the benefit of doubt to Chanda Kochar by allowing her to stay on as the managing director and CEO of ICICI Bank. But, the board also said that Chanda Kochar, in line with the highest standards of corporate governance, on her own has decided to go on an indefinite leave, pending, of course, the results of that independent probe committee that will be headed by Justice Sri Krishna. Also, the board, as expected, has appointed Sandeep Bakshi, who is currently the ICICI Pru Life MD and CEO, as a whole-time director and chief operating officer of the bank to oversee all of the operations. So all the executive management and other executive directors will be reporting in to Mr. Sandeep Bakshi, who in turn, according to the statement of the bank, will be reporting to the MD and CEO, and in her absence be reporting to the board of ICICI Bank. Do remember, Sandeep Bakshi is no stranger to banking. He started his career at ICICI Limited in 1983, has overseen both the wholesale and the retail businesses of the bank before heading on, to ICICI Life and his other functions in the group. Also, separately, the board has recommended to the board of ICICI Pru Life to consider the appointment of N.S. Kannan as the MD and CEO of Pru Life in the absence of Mr. Sandeep Bakshi, who will be with the bank for the next 5 years at least. Also, separately, we were expecting some announcement on that independent probe committee as well, but nothing was released by the bank on that front. But we have picked up from sources that the official letter of appointment from ICICI Bank has gone to Mr. Sri Krishna only on Friday, and therefore the probe is yet to begin. He will begin the process of appointing members of this independent committee that will be looking into allegations against the Videocon group, and it will comprise of several experts, lawyers, as well as forensic auditors.
All right. Thank you, Ritu, for all of those details. Now, as Sandeep Bakshi moves to ICICI Bank, the board has appointed N.S. Kannan as the MD and CEO of ICICI Prudential. Yash is joining in with more details on the leadership change at ICICI Pru.
Management reshuffle at ICICI Bank also got a change of guard at its life insurance subsidiary, which is ICICI Prudential Life Insurance. As per the direction from the board of the bank, ICICI Pru Life approved the appointment of N.S. Kannan as its managing director and CEO, relieving Sandeep Bakshi from that very role, who will continue to serve as the non-executive director of the life insurance vertical. Also, this reshuffle at ICICI Prudential Life will require the insurance regulator IRDA's approval, but that will be more of a procedural requirement. But at the moment, talking about the man at the helm, Narayanan Srinivasa Kannan, academically, he is a CFA from the Institute of Chartered Financial Analysts India, also holds a bachelor's degree in mechanical engineering. He is also an MBA in management from IIM Bangalore. As far as his association with ICICI Group goes, he was appointed as the project manager at ICICI Group in the year 1991, went on to become the executive director of ICICI Bank in the year 2009. Also, as far as the departments that he's looked after some of the most crucial departments like finance, treasury, corporate legal, operations, as well as risk management, with other various smaller departments. He was also appointed as the chairman of ICICI Bank UK PLC in the year 2017. He's played a material role when it comes to the various subsidiaries of the ICICI Group. He's been the chairman of various subsidiaries like ICICI Pru Asset Management Company, ICICI Eurasia, ICICI Securities Primary Dealership, as well as the life and the general insurance company, which is ICICI Prudential Life Insurance, as well as ICICI Lombard General Insurance. So yes, it's a clean blend of experience as well as understanding of the various group companies, which has really made the board decide on his name as far as the position of MD and CEO is concerned for ICICI Prudential Life Insurance.
Okay, thank you, Yash, very much for that. Quick break on that note. On the other side, trade war jitters are weighing in on the US dollar. In fact, a lot of currency is on the back foot today because there is a risk of this move towards the Japanese yen, the Swiss franc, and of course the dollar. Alvin Tan of SocGen will be joining in on the other side to analyze these trends.
Welcome back, and it hasn't been an easy day really for any asset class. It has been a decline in equity markets across time zones, and same has been the case for the global commodities and currencies as a space as well. When you look at the commodity markets, if you look at the iron ore or the steel prices, coking coal, all of that fell between 4 to 7% in the Shanghai markets today, and that pretty much has been the case with currencies. The US dollar is still holding around its 7-month highs, but the other high-yielding currencies, emerging market currencies, and also the commodity currencies have seen a sharp decline come in. So whether it is the Canadian dollar, the New Zealand dollar, Australian dollar, all of that is trading at a multi-month lows. The euro is down, the Chinese yuan was down 5-month lows. We've seen GBP fall to a 7-month lows as well. So everywhere that you look, it is quite in the red that we are seeing all of those currencies versus the US dollar. Alvin Tan is Director for X Strategies at Societe Generale, and he joins us on a phone line now. Alvin, hi, good to have you. It's been quite a day starting right from the New York session yesterday to Asia and Europe right now. How are you looking at the currencies as a space, and how long, how much of an impact do you actually foresee coming in from these trade concerns?
Hello, hi, I'm glad to be here. Yes, indeed, what we are seeing is quite a generalized risk aversion move. So we've had, as you mentioned, the high beta currencies getting hit. And incidentally, the top performer, in fact, of the past 2 days is the yen, the Japanese yen. Incidentally, the Swiss franc have also managed to outperform the US dollar this week. So it's quite a classic risk aversion move there. Going forward, of course, the situation is very fluid. I mean, now we're going to have to see whether the Trump administration does indeed go ahead with this threat of additional tariffs on another 200 billion of Chinese imports. China has, of course, threatened to retaliate if this recent threat were to be realized by the U.S. administration. If indeed that were to happen, we will see more risk aversion going forward. So basically EM currencies likely to continue under pressure. And the yen, in our view, likely to continue to outperform going forward. And we do think definitely dollar yen has more downside potential, not just in the next few days, but broader than that. We think that the yen should also benefit in coming months and quarters as the BOJ moves towards normalizing policy.
Alvin, what's your sense on the Asian currencies as well? Because the Indian rupee is trading at a 3-week lows yesterday, and that's pretty much the case across board here. And as I said, the commodity currencies, whether it's the Canadian dollar, Australian dollar, trading at a 1-year low. So clearly there is risk aversion, as you said, across board.
Yes, I think what is interesting about EM currencies in general, not just in the past 24 hours, but this year more broadly. Yes, it is true that EM currencies as a group has underperformed this year, but it's worth noting that the EM currencies that have underperformed more than others tend to be those currencies associated with countries with persistent current account deficits. So, for example, the Turkish lira and also, of course, the Indian rupee. So, if we were indeed to get a escalation to a full-blown trade war, it is likely that countries with this kinds of structural problems in the economy, principally with large and persistent current account deficits, are likely to get hit harder than those EM currencies where they are associated with countries with surplus current account balances.
That point is well taken, Alan. Thank you, Alvin. Thank you so much for joining us. But that clearly is the view coming in from Society General that EM currencies, of course, have underperformed this year. And if the trade war goes further from here, you could be looking at more hits actually coming in for these currencies. Prathamesh Malya as well joins us now to talk about more of those space. But we will go to him after this very short break. And we will talk about, of course, commodity strategies on thereon. Welcome back, and joining us on the show now is Prathamesh Malya. Prathamesh, hi. It has been quite a washout of a day for all asset classes. I want to begin by asking you about the metals as a sector. Third day of decline, and the decline only gets deeper.
Manisha, yes, it's a complete washout across the commodity space, and no doubt it is the trade war that is actually spiking into a fall into all the metals, and this is going to continue going forward. And if this is going to continue going forward, the pressure would be seeming in all the metals, including precious. You have energy as well as base metals. No commodity will be spared.
Anything that you look at that gives you an encouragement or strength to buy, really? Would gold really feature in that sense?
To that extent, if you're really looking for a short-term trade, I would place my bet on gold and silver on the buy side. But then in a longer-term story, I think a rising interest rate scenario will not really favor gold. So even at 31,000 price points, I would not be a buyer, and 40,000 price point in silver, I really would not like to be a buyer. But no place on the bets on the buy side. But if you're just looking for near-term targets, I think 31,200 for gold and 40,600 for silver is what the immediate near-term targets are.
Also, how are you looking at the crude oil prices? Because that continues to be very volatile. Of course, markets today forgot about the meeting in Vienna from OPEC. It has all been about the trade war concerns. Having said that, how is crude really reacting to that?
I think, Manisha, in the entire situation, whether OPEC on June 22 decides whether to cap its output or not to cap its output is really sidelined now, because trade war is taking a focus, and purely because of this, all the risk assets will be dumped, and including crude. So I really do not see crude gaining up from here on. So pressure would be there on crude as well. I think 4,350 and 4,300 are two possible targets that you would see from here on. So I would be a seller in oil as well.
All right, so no buying call really in crude and in metal space. Gold perhaps could be your hero for the day today. Prathamesh, thank you so much for joining us. And with that, that's all that we have on this edition of Closing Bell. After the bell comes up next.